The residents, we need a laptop or something that connects to it. The residents can see our agenda.
But yeah, we're not good enough to do the
Well, that's on,
handouts as of yet.
Well,
It's really easy. You just
But we
share a
will.
screen.
You just
But we
share a
will.
screen.
It's super easy.
Maybe I'll try and do that with my computer next time. Maybe.
Because when you're reading through that stuff,
Mhm.
especially with the mask on, but it's really difficult to hear everything. So if they could read along as you're reading it, even if we created a couple of slides to put those things
Well,
up.
it's also, it's
It's an
on the
easy
website
screen share.
too, so they can always,
Yes.
if they have their computer, they can always open it up.
I'm more thinking for the people who are doing the call-in, who don't have
Yeah.
the computer. Oh yeah, but then they wouldn't be able to see it.
Yeah,
Right.
that's true. Okay.
But either way,
Yeah,
I think it would be good.
And,
Well, I think what we could do is just announce at the beginning of the meeting that the full agenda is
Yes.
at this link
Yes.
on the website.
That's
and
a
remind
great
people that
idea.
it's there and available, and that way they can follow through. Because it can get confusing if you're just listening, the numbers of things that we're.
Yeah, we do a lot of share screen stuff when we're doing our meetings,
It's
so that
incredibly
the agenda
helpful.
can be seen by
yeah,
everyone.
I know it's easy. I haven't got to that part yet.
Yeah, it's just, there's a button down at the bottom.
Yes,
It
I
says
saw
share.
that right there, it's green. All right, so we've got our bankers here. So let's open up our meeting. We've got our Finance Committee meeting on Thursday, June 11th, 5 o'clock p.m. And we have it set up by live streaming. We have Zoom here, and we have some people to put on to Zoom so that they can come in. Submit. Unmute. Submit. All right, we've got a couple of telephones here with numbers, so let's see if anybody, can you hear us?
Yes, I can hear you. This is John Testa from Bar Harbor Trust Services.
All right, great. And then can we hear Ruth?
Yes, I'm here as well. This is Ruth Dunbar from Bar Harbor Trust Services.
All right, wonderful. We have the Finance Committee here. I'm Catherine Ruth, the Town Manager. We have Heather Donahue, our Mayor, and we have Amanda Colomar, who is our Chair. One of our counselors is not here this evening. So why don't we start with a review of the documents that you sent, and Ruth and John can update us on those documents. Everybody has a copy.
Okay, wonderful. I'll start in. I prepared a relationship summary. It's dated May 31st, 2020. It's a very basic document, but I think it's helpful to review it from time to time. And since John and I are new to the relationship, we just want to make sure we're administering and managing the account the way you want us to. So we have a very conservative objective with this account. We have a long-term time horizon, which is 5 years or more. At this time, there aren't any regularly scheduled distributions. I'll skip over the legal because you would know all of that. Catherine is authorized to request checks that are payable to the town of Pittsfield. The fee is 25 basis points on the money that we're managing. We do complete a spreadsheet for the town, breaking the money down into various sub-accounts. And that's about it for right now, other than I wanted to check to make sure that the people who want to get statements are getting statements, that the format for the statements is okay. And before we end the call, we just would like to know if there's any anticipated cash needs from these funds. And that's about it for the administration of the account.
So this was the one-page document, black and white, that was sent out as part of the package. And so they were just talking about how the process is set up. And so the statements go to the town office, which is fine when they're filed. And the statements are fine. I know breaking it down between all the accounts is sort of a pain, but we have to do that because they're all separate reserves and trusts, and we have to know what's in each one. And I'm fine with the setup as long as the pennies are correct. Because when they're not, and we have to go back and fix it, then that's always been an issue. In terms of the cash needs, until the last few years, before you started, we always were able to tell the bank what the needs were and everything, but now, everything's in flux, and, money is getting tighter everywhere, and especially now. So we may have cash needs or we may not, so that's why we've kept a certain amount of money in the account for, to make sure if something comes up, which would likely be an emergency, that we would have enough cash.
Okay. Okay. So with that, I'll turn it over to John, and he can go over the investments.
Sure. Thank you, Ruth. What I thought I'd do this evening is provide a brief economic update, kind of say, where we see things right now. Focus more obviously on the fixed income market and the bond market, and then get into the details of the handout. It should be about a 6-page handout that we prepared. And then please feel free to ask questions as we go along. So just regarding the economy, obviously the virus caused a large decline to the stock market. Pardon me, in March, and we've had this quick rebound. But during the decline in March, you had the Federal Reserve or our central bank step in a big way, step in super quickly. They've never acted on this big a scale and this quickly before. And really what they did is, the first step was to lower interest rates, and then they started purchasing a lot of different bonds out in the market. They were purchasing government bonds. They even started purchasing corporate bonds, and that had the general effect of lowering interest rates over that time period, trying to provide liquidity to the market. And that's really the main reason that you've seen this market come back so quickly and so sharply, is because of a lot of it has to do with what the Federal Reserve has done. Over the past couple of months, and what they'll likely continue to do. So yields have come down because of what the Fed has done. So going forward, it will be more of a challenging environment to find higher yields, to find income. But we feel the places where we feel there will be additional income is, and places we would overweight, are brokered CDs. They are, as of right now, paying a higher yield than a government bond, such as the U.S. Treasury. They do have a little less liquidity, so we do want to be mindful with the amount of them that we have in the portfolio. But we do think we can get enhanced yield there with brokered CDs. And then we also think that there will be, on occasion going forward, with high-grade corporate bonds, we think we can get enhanced yield from those as well, too. So those are two areas where we feel we can get additional yield. U.S. Treasuries and government bonds, at least for the foreseeable future, we think the yields are going to be especially low there, just with all the buying of the Federal Reserve in that area. And then the other part we would look for is, look at the maturity that has the most yield to offer. So whether it's, looking at a bond, that matures, either 1, 2, or 3 years, where would we be getting the most yield? with a 1-year bond, a 2-year bond, and a 3-year. So looking at different maturities as well too to see where we can enhance the income in the portfolio. And so that's kind of the strategy or approach we would take to trying to maximize the yield in the portfolio in this low interest rate environment, which will probably be low for some time, just based on what the Fed has said just the other day. They came out and made an announcement. So that's kind of just a brief economic update and kind of where we see things going and how we would approach this market, just based on what we know at this moment. But I think definitely, safety and being conservative is priority number one. With investing these funds, so being safe while still looking for the maximum amount of yield. We still think you got to be careful with some corporate bonds. There could continue to be issues there. So again, we're going to do our research and make sure that we're buying corporate bonds that are safe and conservative, but still trying to maximize that yield. So again, just a brief economic update. Were there any questions on that before I dive into the presentation?
No questions here. Thank you.
Okay. So if we turn to the second handout, and if we turn to page 1 of 6, you'll see the page number in the lower left-hand corner. The page I'm on, in the upper left-hand corner, it says Total Account Summary. It's got a blue band at the top. And you'll see a pie chart in the upper right hand corner. And so this is a summary of the account and its current asset allocation. So you'll see as of the end of May, the account value was $1,934,691, and about 60% of it is invested in bonds, and we do have about 40% of the account in cash. Just a couple of reasons to discuss the cash piece. First, we wanted to meet with you folks and just make sure that the investment strategy that had been implemented still makes sense for this. And the second part, and you folks alluded to it in the beginning of the call, things are more uncertain now, and we have been meeting with other municipal clients, and they have been holding more cash just because of the uncertainty, and we wanted to check with you and see if that is the same case, or if those dollars could be invested. So that's why the cash is at about 40% of the account. If you look in the lower left-hand corner, you'll see this is just going back 3 months, the quarterly gross return. And so you can see the beginning market value 3 months ago was $1,942,000. And then you can see the beginning accrued income, any contributions, the withdrawals of about $30,000 over that 3-month time frame. The income that was earned, about $7,200. The bonds in the portfolio went up in value about $9,000 due to interest rates coming down. And then again, we have that ending market value there as well too. And on the lower right-hand side, you can see the top 10 holdings, or the top holdings in the portfolio. Were there any questions on this page?
So on the cash, we used to keep 100,000, and that was never quite enough. Can we buy items at lower amounts now because of the situation, so that they'll appreciate? So we should free up some of this cash and purchase certain items?
We can definitely invest more of the cash. And did you still want to keep the cash target at 100,000?
I think it
Or does it
probably should be higher just in case things happen.
I don't know how I feel about investing any of it right now, or we just don't know what's gonna happen.
But can we get good deals on things?
That's what I was thinking, if you buy at the low, when
Yeah.
things are on the swing up.
Yeah. Mhm.
Market, John, do you foresee the market kind of stabilizing and then slowly building over the next, say, 6 months or so? Or things are too much up in the air with an election coming, and October always seems a tough time of the year for the stock market?
I think going forward with the stock market, I don't know if anyone saw the market today, but it was, we had a pretty big down day. I think the market was down about 5%. We haven't seen that in, probably since March, that type of down day. Based on what we know, I think it's probably unlikely that we test the market lows in March, but I don't think we're necessarily out of the woods yet either. I do think the market, I think you can see the market sell off a little bit from time to time going forward. I think corporate earnings are going to come out for the second quarter soon. You're probably going to see some disappointment there, and I think the employment numbers are, could potentially disappoint after July, because you still have the number one, you have the PPP loans, which are temporarily supporting some employment, and then you also have the enhanced unemployment benefits, the $600 from the federal government, and I believe that ends, as of now, it ends as of July. So I think it's going to be very interesting to see that transition from probably the end of July, August, September. How does that look unemployment-wise? So I think if numbers don't look as good, you could get some more volatility in the stock market going forward. So I think it would probably err on the side of being a little bit more conservative at this point in time, just because of all the uncertainty that's still out there. Would be my suggestion.
John, do you think that, because I know right now Congress is trying to push to extend that $600 a month for another 6 months, do you see that making the stock market go down again?
So if they extended the 600 to the I believe to the end of the year or early next year, my guess is that would be beneficial. I think the market would look at that as beneficial. People would have more money to spend at stores. So I think that would be beneficial. There's always the downside of, well, if you do that, then people have less. Some people will have less of an incentive, to go back to work with those enhanced benefits. It could delay restarting the economy, some people say. So that could be one potential negative aspect to having that. And I guess the question mark is the high end seems like extend to 600. Some people are saying let's cut back those benefits to 250, 300 instead of 600. And then you have the other end of it too, which is let's just end that enhanced benefit at the end of July, and let's not extend it. So my guess is they likely probably come meet somewhere in the middle with that, which I think overall would probably be beneficial for the market, just because people would have more money to spend, and that benefits the economy, and helps fill in the gap of people not working.
I guess I'm inclined to kind of leave things as they are for now because
That's
just
how
because of
it's
the
just so
volatility.
up in the air.
Yeah. Catherine, do you think that that's an excessive amount of cash to leave uninvested?
I think it is, yes. I wouldn't put too much in. I'm thinking, we usually have 100,000, and then if we can get the money out of the sewer reserve, we can use that. You can't borrow from your reserves, but if we can get 300,000 out and leave 400,000 in there, and then invest the rest of this, we wouldn't be putting it into bonds. We'd want to put it into items that were safe. But if the rates are too low right now, we'd have to wait a little bit so that we didn't tie up the money, so we couldn't make more interest. I mean, investment people would know better on that.
Yeah, we would, depending on how much cash you would want to keep, we wouldn't just right after this call, just invest the money right away. We'd be very deliberate in how we put the funds to work. We'd likely be, patient and wait for opportunities in the bond market or in the CD market to become available, and then purchase at that point in time. And so that can that can take some time, depending on what happens to interest rates and things of that nature. So we would be very deliberate with putting money back into the market. Make sure we are getting what we feel is a good yield, while still being very safe and conservative with the fund.
So let's do this. Take 283,152 out, and then that will leave $500,000 in.
That's what I was thinking. I don't want to see it go below 500,000 because I think that's safe.
What does Heather think?
Okay.
I'm okay with that.
Okay.
I think we're safe to invest a little bit more of it because that is a lot of cash to have on hand.
Yeah.
What was the amount of we just approved a loan, a bridge loan.
So we've got our $706,000 capital improvement program loan.
No, I'm thinking of the one that it was for cash because
And then
things
we've
are
got
coming in slower.
the tax anticipation note
Tax
for
anticipation.
$500,000, yeah.
And that was 500,000.
Yes.
Okay.
Yeah, so
Do we
keep this
need
at
to-
500,000.
Do we need to do that if we have this cash on hand?
We can't use the reserve fund, we can't borrow from the reserve fund.
Okay.
Yeah.
Okay. Yeah, I'm okay with doing that and then leaving 500.
But we had talked about the USDA reserve account and how we have plenty of money for the sludge removal, which was a requirement, and if we could get that taken off, we can get some of the cash out, and then we can use that for other things. But that's with the federal government.
Okay.
No, all right, very good. So we're thinking 283,152 with your deliberate plan to find the best items.
Okay, perfect. That sounds great. So we'll make sure that there's $500,000 in cash in the portfolio.
Thank you.
Okay, perfect. If we turn to page 2 of 6, we'll go over the fixed income analysis. You'll see under the March 31st, 2020 column, you'll see some characteristics of the portfolio. You'll see of the bonds that we currently hold, the coupon payment is a little over 2%, 2.18%. Yield to maturity of 0.41. the maturity is low because of the price of your bonds have come up in your portfolio because interest rates have come down. So looking at you'll see the current yield there at 2.13%. That's a better gauge of the yield or the income you're earning. And you'll also see the maturity there. The average maturity of all the bonds you hold is 1.36 years. So again, it's a shorter portfolio. So bonds will mature at a faster rate, which gives us more flexibility when reinvesting. We don't have to wait as long to reinvest those funds. And that would be our general strategy going forward. Just with interest rates so low, there's very little room for interest rates to go lower, and they likely have to go higher. So it doesn't make sense to invest in a lot of longer maturity bonds because we feel we'd just be locking in a lower rate. And if interest rates do go up, we want to be able to capture that higher interest rate faster. So that we think it makes sense to invest in shorter maturity bonds again, so that the bonds mature at a more rapid rate and that we can reinvest those funds. At the bottom in the lower left-hand corner, you'll see the quality allocation, so the quality of the bond. In the blue, you'll see AAA. That's the highest quality rating. And then I just want to point out, you'll see the NA in green there. The NA bonds, those are the brokered CDs, and they do not have a credit rating, but they are FDIC insured. So they are insured by the FDIC, and they're under the $250,000 limit. So all high quality bonds in the portfolio. If we turn the page 3, we'll continue with the fixed income analysis. You'll see the breakdown of the bonds at the top there. So you have almost $300,000 worth of bonds that are going to mature this year in 2020. A similar amount in 2021, and then about $550,000 that are going to mature in 2022. So again, a shorter portfolio, and our thought is to continue to keep it that way going forward. At the bottom, you'll see the types of bonds you hold in the portfolio. So that peach color, the U.S. government obligations, those are high quality mortgage bonds. They make up about 40% of the bond portfolio. So the largest piece, the brokered CDs in the blue there, second largest at about 35%. My apologies, I misspoke there. That peach color, those are U.S. Treasuries. They make up the largest portion, and then that maroon, red, those are the agency mortgage securities at about 13%. And then we do have one corporate bond in there with the yellow color at about 10%. So again, just a breakdown of the type of bonds in your portfolio. And I think going forward, just based on where yields are, we're seeing the most value, with the brokered CDs and the corporate bonds at this point in time. If we turn the page to page 4, we'll dive into the investment performance. And so you'll see the performance at the bottom there, and the performance of your portfolio is in bold, and then we've added a benchmark below it as a reference point. So you'll see the performance of the total fund, so that includes both the cash and the bonds in the portfolio combined together. And we've broken out the performance going back to the inception, 2009, of when People's United Bank held the funds. More recently this year to date, so the first 5 months, the total portfolio is up about 1.3% versus a benchmark of about 1%. And again, if we're looking at just the fixed income in the portfolio is up about 2% versus a benchmark of about 1.1%. And then we have the cash and equivalents there at the bottom, roughly in line with its benchmark year to date. Were there any questions on the performance?
Doesn't look like it, no.
Okay. If we turn to page 5, we can get into the individual holdings in the portfolio. At the top, you'll see the brokered CDs. We're currently invested in 3 of them. Again, they're all FDIC insured. Below that, we have the corporate bond, the BMW bond, and then we get into the mortgage security. And then at the bottom, we hold the government securities or the U.S. Treasuries. We have 3 of those. And at the very bottom, we have the cash and equivalents or the money market funds. Again, that's at almost $800,000. But again, we'll make sure that we keep $500,000 in cash going forward. If we turn to page 6, again, you'll see the total value of the account for the portfolio. The estimated annual income there, you'll see that towards the right, about $25,500 in the portfolio going forward for the next 12 months. And again, that'll vary a little bit depending on the type of bonds that we buy with the cash in the portfolio. And again, it obviously will depend on where interest rates going forward as well. So that's all I had tonight for you folks. Unless you had any other questions that I could answer, either about the economy or about the account or anything that we reviewed.
Nobody has any other questions? Ruth, did you want to say anything?
I'm sorry, I hit the wrong button. No, I'm all set. If you're all set, if you have any questions or concerns, please reach out. We're happy to help in any way we can.
Well, excellent. Thank you so much. This is very helpful to get updated.
Thank you very much for presenting for us today.
Thank you.
Thank you.
Yeah.
Have a nice
Yeah,
evening.
thank you for having us, and hopefully we can meet in person shortly.
That would be nice.
That would be unique, yes. Thank you so much.
Thank you. Bye-bye.
Thank you. Bye.
The bonds had been maturing, and so because of the economy, they just kept putting them into the cash. So that was a good comment to make. When we had 100,000, and it was never, that's what we did to maximize the interest, but it really isn't enough to have in there.
Mm-hmm.
So I think that we got a good compromise now. All
We're
right,
so worried where we don't know what's going to happen
we
with
have
everything.
no idea.
I'm watching my retirement fund very closely.
Yes.
Jeff is closer to retirement, so he's been watching his very closely.
I know, they were doing so well, and then,
Yeah.
all of a sudden.
They were doing great and then went,
Just like that. Would you like me to try Ed to see if he's available?
That would be great.
Okay.
If he's available early, that'd be awesome.
That would be wonderful, we'll try that. All right, we gotta call him, so we're gonna do it on the phone, which is fine.
oh, so people joining, if anybody is joining through Zoom, won't hear it?
I think they can hear, because he's gonna be loud, because I got it turned up, so it seems like this has all been working good.
Oh, so do you have a microphone on the
Yes.
computer that we're, oh.
Yeah, we went out, I had the little one,
So we were hearing them through the speakers on the computer then?
yes.
Oh, it was so clear, I thought it was through the phone.
The phone, when we have the phone, it makes a vibration noise. I don't know why. Every time it's different. I don't know how to explain it. 'Cause
Super fun.
We do the same thing.
Maybe it depends on if there's a cloud above the.
Maybe it vibrates because it's sitting on a hard desk and it's a hard plastic feet. So maybe if we put something cushy underneath it, it would absorb that and you wouldn't get a vibrating noise with it.
Okay.
Because if it's turned up loud so that you can hear it in a large room, then
Okay.
that might help.
Since sound is vibration, that makes sense.
Yeah. 8th grade physics.
That's right. One of my favorite subjects, physics.
Hi, this is Ed.
Hi Ed, this is Catherine from the Pittsfield Town Office. Can you hear me?
Yes, I can. Can you hear me?
Yes.
Sounds good. So I'm here with Heather Donahue, our mayor, who's on the finance committee, and Amanda Colomar, who is our chairperson. And one of our counselors wasn't feeling well this evening, so she's not here. So we are ready early. So if you'd like to start your presentation, the counselors have a copy of it in front of them.
Okay, perfect. And thanks for having me today. Again, my name is Ed Donahue. I'm from TD Wealth. I'm reporting to you today from the room above my garage, which has become my home since I think March 19th was when we started working from home. So let's get into it. So a couple things. You're going to look at a page that just shows the historical growth of the account. I know a few meetings ago that was something that Kathy had asked me to kind of pull together, so I've just kind of added to that, updated it. We'll talk about asset allocation, how the account is positioned currently, and then we'll look at some of the portfolio details, and then we'll review performance. And then I want to wrap it up just with a pretty brief market outlook. Well, does that sound okay?
Yep, it sounds good.
Okay. So if you turn to page 2, this just shows year-by-year growth of the account. So you start with the beginning balance. You know, there haven't been contributions other than at the outset of this account, and then the annual withdrawals are accounted for in the withdrawal column. At the ending balance, the net increase or decrease just in the value of the account for that given year, and then the cumulative increase or decrease in the value of the account in the final column. So, you know, really, we've got, 2008 obviously was a bad year for the markets. 2015 was kind of flat, but slightly negative. In 2018, there was a pretty drastic downturn in the fourth quarter of that year. But then 2019 was a really strong year. The account went up about $191,000, and actually the account closed the year over the $1 million mark at $1,041,000. And then the first quarter happened, right? So the bottom line number where it says year-to-date 2020, the 937,945 is what the account was valued as of June 4th. That was I put this presentation together as of June 5th. So that was the value as of June 4th. I can tell you that the value as of close of business yesterday was 941 and change, but the stock market was down about 7% today. It was a big down day in the market, so it'll likely be lower than that. But just to give you a little example of how volatile, the first five plus months of the year have been. The account started the year at $1,041,000. As of March 23rd, which was kind of the trough of the market downturn, the account dropped all the way to $760,000 as of March 23rd. As of March 31st, it was back up to 845, and now we're back up to the 930, 940 range. So a lot of volatility in the first half of the year. And we might continue to see some of that volatility for a period of time until we hopefully soon see some signs that life will get back to some semblance of normal. Okay, so that's just kind of a summary of the growth of the account. But since inception, net of withdrawals, this account has grown. The increase in the value of the underlying investment is about $841,000 through June 4th. Okay. Next page, we talk about asset allocation, and we'll look at the details and the breakdown of the investments in the portfolio in just a bit. But this is what we would call our current positioning. And I want to take a step back for a moment because at TD Wealth, we have a called our Wealth Asset Allocation Committee, and they drive investment allocation decisions for our client portfolios. Now, we have to manage to many different investment objectives. Different investors and different institutions have different investment objectives. Some clients, we only invest in bonds. Some clients, very few clients, we only invest in stock. Most clients fall somewhere in between. Now, the investment objective for this particular portfolio is what we would call moderately aggressive. So it's basically a target of 65 to 70% equities and then 25 to 30% bonds and cash. Okay, but this Wealth Asset Allocation Committee will make recommendations for long-term strategic allocation, and these different categories on page 3. U.S. large cap stocks, U.S. small and mid cap stocks, international equities, emerging market international equities, gold, intermediate corporate bonds, intermediate treasury bonds, short-term bonds, high-yield bonds, and cash. Those are different categories that at any given point in time can be represented in our client portfolios. But this committee, as they look forward and look at what's happening or what they think will be happening in the markets and in the economy, they'll make allocation adjustments to what their long-term strategic allocation is. Okay, so here on page 3 where we show U.S. large caps, so it says we're modestly overweight. Our committee feels right now that the U.S. large cap stocks is a better place to be than, say, international equities where we're modestly underweight. We're neutral towards our long-term strategic allocation on small and mid-cap stocks. Emerging market equities, we are currently in a modest overweight position, and at a neutral position, we wouldn't have any exposure to emerging market equities, but it was recently announced that we're likely to remove our exposure to emerging market equities from client portfolios. So don't be surprised the next time we review this if there are no emerging market stocks in the account. Gold, we haven't had gold in the portfolio for some time now. Gold is it's an asset class that we use as a hedge against extreme outcomes. Now, it's never been a large component of the portfolio, probably more than 3 to 5% of the total account. But the last time we had gold in the portfolio was back in 2016, more leading up to the election. Because no one knew what was going to happen. And eventually, once President Trump was elected and things continued to go well for markets, we removed our allocation gold. Intermediate corporate bonds, we're overweight that position right now relative to intermediate treasury bonds. We're modestly underweight. And the reason being, during this whole market downturn that we've seen year to date, when stock market goes crazy, there's what's called a flight to safety. And the safest investments out there, or perceived safest investments out there, are treasury bonds or treasury notes. So when the stock market goes crazy, the flight to safety, people sell out of their stocks and they buy treasuries, which in this particular case drove the treasury yields down really, really low. The 10-year treasury note right now is yielding less than 0.9%, lowest really it's ever been. So we're underweight in treasuries. So we're neutral to short-term bonds, we're neutral to high-yield bonds, and we're modestly overweight in cash right now. So if you want to flip to the next page, page 4, this just gives you an idea of how the account is allocated. We've got the June 4th market values and the allocable allocation percentages. And then I've reflected 2 columns. The third column, TD Wealth Tactical Allocation. That's the one where any adjustments recommended by the committee are accounted for. And then the TD Wealth strategic allocation, that's the kind of long-term strategic target allocation that we adjust from. So you'll notice that large cap stocks made up about 45.6% of the account, small mid cap stocks 10.2, international 9.8, and emerging markets 2.9, for a total of 68.5% in equities or stocks. On the bond side or the fixed income side, just under 12% of the account is allocated to corporate bonds, a little over 4% to intermediate treasury bonds, 5.5% short yield bonds, and 4.8% high yield bonds, for a total of 26.2, and there's about a 5% position in cash right now. If you compare the allocation percentage column to the TD Wealth tactical allocation column, they're tracking pretty close to one another. And the reason for that really is just that we do periodically rebalance back to our target allocations in this portfolio. So it's tracking pretty close. We're a little higher on the equity side only because equities after March 23rd have been doing quite well. So it's kind of driven the equity allocation up a little bit, especially in the domestic large cap space. All right. Next page, just real quickly, is page 5. That's an income summary for the portfolio. When you look at these investment accounts, that first page, we just looked at the growth of the account. Now, there are different components to growth in an investment account. There's just the change in the value of the investments. If you have a stock that one day was worth $10 a share and the next day was worth $12 a share, obviously that changes the value of the account. Also, other components of growth in a portfolio are dividends paid on the stocks in a portfolio and interest paid on the bonds. What this schedule shows you is just the income, dividends on stocks and income on bond investments. Kind of shows you how the income hits the account over the course of the year. A lot of mutual funds pay out income in December. That's why the December number is so much higher than all the others. So the anticipated annual income for this account is a little over $17,250. Based on current market value, that equates to a portfolio yield of approximately 1.84%. And again, that's comprised of dividend yield on stocks, but also interest rate on the bonds in the portfolio. See page 6, just disclosures for the income schedule. Once we get to page 7, this is a detailed summary of all the holdings in the account, okay? And all of page 7, all of page 8, and the first half of page 9, down to a stock called International Flavors and Fragrances. Those are all the individual stocks held in this portfolio. And I think the prior page, or a few pages prior, indicated, I think, about 45.6% were in domestic large cap stocks. These are the stocks on the first 2.5 pages of the detailed holding summary. What's interesting is we have a lot of needs there, and diversification is important. You'll never see a stock portfolio that we manage that has fewer than 35, 40, 50 names in it. Because if you weigh any particular investment too heavily in a portfolio, individual stocks can vary greatly in value. For instance, if you want to look at page 7, right? United Health Group, the fourth name down. If you go over to the gain and loss column, since we bought United Health Group, at one point in time we bought 40 shares of United Health Group for $4,787. That market value of that investment now is $11,923. So it's an increase in value of 149%. Even further down, Microsoft, up 292% since we bought it. At the same time, you've got stocks that down 16.7, 17.6, 32.5%. Returns can vary widely for individual equities, so it's very important to maintain that diversification, and that is why you see so many names in the portfolio. Once you get to the bottom half of page 9, that's where you see mutual funds. We use a portfolio of individual stocks for a domestic large cap portion of our asset allocation. For all the other asset classes, again, small and mid-cap stocks, international stocks, emerging market stocks, and all of our bond investments, we're using mutual funds for that. So starting with the iShares Core MSCI Emerging Markets ETF, that's an emerging markets, emerging market equities. Invesco International Growth and Oakmark International Institutional are both developed market international stock mutual funds. And you've got your Vanguard Intermediate Term Treasury, your Vanguard Short Term Treasury, Neuberger Berman Genesis. Name doesn't really tell you what it is, but that's a mutual fund that holds stocks of small and mid-sized companies. Fidelity High Income Fund is basically bonds with higher yield. And then you got your PIMCO Investment Grade Credit Bond. Those are corporate bonds. And then Metropolitan West Total Return Bond Fund. That's a bond fund that holds a combination of corporate bonds, treasury bonds, and high income. So what's interesting about the mutual fund performance, the range of numbers are much smaller. Other than the Oakmark International Investor being down 21.56%, pretty much everything else is in the single-digit range. And there's a reason for that. The large cap stocks, we started off with about the 50 different names. That's what we have so many different names for the diversification. Each one of these mutual funds probably holds at least 50, if not 100, 150 different stocks or bonds. So in and of themselves, the underlying investments are diversified, and again, it's very important to hedge volatility with diversification. Any questions on the detailed holding summary? Anything that jumps out at you?
I'm not shocked at Microsoft's growth.
What's that?
I said I wasn't shocked at Microsoft's growth, considering everybody had to start working from home.
No kidding, huh? Now these are longer term. This is basically since the inception of the investment. I know Microsoft's been in the portfolio for some time, so some of the names that have the larger gain loss percentages, they're probably longer term holdings. Microsoft's a great stock, but it's, I don't think it's ever been up 292% in any given year, any given, shorter period, but over the longer term, it gets there, right? So on page 11, that's what I'm trying to do on page 11 is show performance of each asset class relative to benchmark indices. In other words, these benchmarks are proxies for that type of investment, for each type of investment. So you can see whether the assets we have, the investments we have invested in each of these categories has done better or worse than their respective benchmarks. And at the bottom of the page, you look at the performance of the overall account relative to a blended benchmark, which you get in the bottom left-hand corner of the page, you can see what the blended benchmark is. Since roughly 40, the strategic allocation for domestic large cap stocks is 42%. So we use Standard & Poor's 500, the S&P 500 index, and 42% of the blended index to compare that to the large cap stocks. The Russell 2500 Total Return Index is a barometer for small and mid-cap stocks. The MSCI EAFE or EFA Index is a barometer for developed market international stocks. And then the Barclays Intermediate Government Credit Index is just a blended index of all different types of fixed income or bonds. Okay. So, top of the page. Domestic, where it says domestic, that's the large cap, that portfolio of large cap stocks that we reviewed, that you looked at the detail on. The performance for that strategy has been far worse than what the S&P 500 has done. If you just look at the year to date, that strategy is down 12%, whereas the S&P 500, and these numbers are through May 31st. We can only generate performance numbers as of month end, where the S&P 500 is down, slightly, just about 5%. So the large cap component of the portfolio has drastically underperformed their benchmark year to date, over 1 year, even over 3 years. The performance under is a little closer over time, but recently the portfolio has underperformed the S&P 500. Last month it's done better, but certainly the performance has not been great in that space. The next layer down where you see the Neuberger Berman, that's the small and mid cap stock fund. The next line to the line under that where it says Epic US Small Mid Cap Equity Fund, there are zeros there only because we removed the Epic fund and replaced it with Neuberger Berman, I think a little over a year ago. But that's turned out to be a pretty decent move. So if you look at the 1-year number for Neuberger Berman, it's up 11.2%, and its index is actually down slightly. Year to date, it is down 2.4%, but its index year to date is down about 13.5%. Over the last 3 months, basically going back to, so March, April, May, the small mid-cap holding portfolio is up 6.28. Its benchmark was down 3.68. And just in the last month, it's outperformed its index as well. So that one's done pretty well relative to its respective index. The Invesco International Growth and Oakmark International funds, Invesco's done well. Oakmark International has not. I wouldn't be surprised if we don't see Oakmark International Fund in the portfolio the next time we review this. It's down 27% year to date, the Invesco International. Oh no, the Oakmark International Fund, whereas Invesco is down about 12%, but their benchmark is down about 14. So Invesco's actually outperformed, but Oakmark certainly has not. And then finally, you can see the performance of all the different bond funds. And the high income fund year to date is negative, but all the other bond funds are positive year to date. Again, stock market took a beating, but generally when stocks aren't doing well, bonds are doing well. And so the bond performance, the allocation to bonds is kind of helped buffer what otherwise would be drastically bad stock returns year to date. And so at the overall account level, because of the drastic underperformance in the largest component of the portfolio, which is the domestic large cap stocks, the account's down about 7.69% year to date compared to about 3.5% for the index. So after sharing that information, I want to ask if you have any questions or concerns.
No, I don't see any. I was bragging last year, or I would say this year, when we got our statement, it was well over $1 million. And then, of course, I shouldn't have done that because we know what happened after that.
Way to go, Catherine. All your fault.
I didn't know. But we know it'll get back up there.
I know, it was so funny because it was probably, I do this for a living, right? I manage investment portfolios, and my wife and I just happened to be talking. I turned 50 last December, and my wife's about 4.5, 5 years older than me. So we just happened to be talking about retirement. We're not close, but we're talking about it. But the funny thing is, I do this every single day, but I never look at my 401k. I don't look at my wife's 401k, even though she wants me to. So at one point, I kind of pulled everything out and we pulled it together. And I'm like, oh, okay, well, maybe we can retire by the time we're 65. We're feeling good about ourselves. This is probably in January. And almost immediately, the market turned. And I knew I jinxed myself. So yeah, I know how you feel, Kathy, about, feeling all good about the 1,041,000 as of the end of December. But it is, all of these portfolios, right? You're going to see blips over time. 2008 was a really, really bad downturn in the market. But for portfolios for individuals, but especially portfolios for institutional portfolios such as this, it is very, very important to keep your long-term perspective. During this market downturn, I had 2 clients call to de-risk their portfolio. They wanted to get out of stocks altogether. I advised them against it, but they had other reasons behind it, so they changed their portfolio to 50% cash and 50% fixed income. And now they're regretting it because the stock market has bounced back quite a bit. I had two people that called me once the stock market went down in February, March, called me to put all of their investments in stocks. To sell out of all their bond investments, thinking it was a great buying opportunity. I was successful at talking them out of that. I said, let's just maintain focus on the long term. The allocation you have in your portfolio now is what we determined is most appropriate for you and what your goals are. Institutional accounts that are supposed to last essentially into perpetuity, it's even more important to keep a long-term focus. As you saw, on the growth of the account, since 2003, I think the cumulative growth of the account was in the $800,000 range. On an account that's worth about $940,000 now. So maintaining that exposure to the investments that are dictated by the investment policy and that are held in the account, it's just very, very important because we know the market's going to go down, but that it's going to come back up again. And, I think I told you, I had two clients called to de-risk, two clients called to go, throw it all against the wall. Other people ask me sometimes, because they know what I do, whenever the market goes crazy, like, oh, your phone must be ringing off the hook. And it really wasn't. Those are really the only 4 calls I received. Now, I've called and reached out to my clients to talk to them about it and make sure that, they were feeling okay. And, someone said, yeah, they're a little nervous, but they're not, but we know this is a long-term thing. We know it'll come back. We're just going to kind of grind through this and, hope to see the other side sooner rather than later. And the recovery has been quite quick. I can't believe we got back to where we started the year the other day. I think we're going to be below that now because of the downturn in the market today. But it's been a pretty steep recovery. Long-term focus is key. So next page and the final page, and I know I'm running out of time here, but just our market outlook. At this point in time, as I mentioned earlier, we are overweight equities overall relative to fixed income, and underweight fixed income as a result of that. Even in the equity space, our preference is for U.S. equities, since improving sentiment, lockdown easing, and aggressive stimulus measures should support a relative valuation advantage for U.S. stocks over global peers. And that's why we're underweight in the international space. We'll never really completely get out of an asset class other than, let's just say, gold or emerging market equities, because those two, anytime we have an allocation of those two, it's a relatively small allocation, and those are very volatile asset classes. We expect interest rates to remain at low levels, with volatility elevated and inflation low. I think we've seen aggressive monetary and fiscal policy responses by the Fed and the administration. And thankfully, the moves they've made to date have been pretty well received and have prevented a 2008 type crisis. But these lower interest rates will become a long-term drag in economies. In the fixed income sector, we do remain selective with focused opportunities in corporate credit. That's why we're overweight corporate bonds relative to treasury bonds. Amid the economic damage, earnings and employment weakness are unfolding in line with expectations. We do expect a short and sharp recession. I don't think we've actually entered recession territory yet, but we do expect a short and sharp recession, but the speed of recovery will be dictated by treatment and vaccine progress. And I think we're starting to see some development there. But ultimately, we're always going to favor a diversified investment portfolio that includes high-quality stocks that have the ability to increase their earnings and dividends in a low-growth environment, thereby protecting the real value of investors' savings. And the U.S. does remain our favorite equity market globally. We always want to have an allocation of cash. It's always small. And generally, our allocation of cash is between 2 and 5%. Our target is at 5% right now. And we always want an allocation of high-quality corporate bonds, including investment grade and high yield. in order to provide some income diversification and stability. That's all I've got for the presentation. Again, I'm happy to answer any questions you have now or any questions you come up with after the fact. If you have any, you can just forward them to Kathy, and she can pass them along to me, and I'll do my best to answer them. But do you have any questions right now?
No, not right now.
No,
Thank you.
this works out really well being diversified, because before we put the monies with and did the RFP and went to TD Wealth, what we inherited at all the different facilities was not diversified. So this has worked out really well, built up, and each time we are in it for the long run. So each time, the few times it's gone down, it will come back. Definitely.
Yep.
So it's a good strategy. Thank you so much.
Thank you.
Oh, you're welcome. And I hope you guys get through this COVID stuff unscathed. Anyone else, is everyone else kind of working from home these days?
I am.
I
Always do.
I always work from home.
Oh, that's well. You know what? I'm finding that I wasn't happy about it when they told us we had to start, because normally in my office I've got a stand-up desk and I've got 2 monitors, but anytime I work from home I just bring my laptop home and I'm on the small keyboard and the small screen, and I didn't like it. But when they told us we were going to be home for an extended period of time, I just dragged my entire office setup with me and set it up in the room above the garage. And I tell you, I love working from home. I could do it forever now.
I'd like to go to the office once a week at least. That would be nice.
Yeah, I didn't think I'd like it, but I sure do. I sure do. But in any event, it's nice talking to you today. Thank you for the time, and I wish you the best. And I hope you can all make the most of the summer that's right around the corner.
Yeah.
Thanks, Ed. You
Thank
too.
you.
Thank you so much, Ed.
All right, take care.
Thank you.
Bye now.
Bye.
All right, so the half an hour, 35 minutes of the presentations went really well. I've got the reconciliations for the council package. So we'll look at those regarding the budget and where we are, and the revenues and where we are. And the tax anticipation note issuance for the company to select is on the agenda also, as well as other interesting items. Those are the financial ones. We sent out the warrants, and we don't have any water and sewer commitments right now, because we did get caught up there, which was good. All right, so unless anybody has anything else.
Did we need another meeting?
I'd like to, I'm bummed Deb's not here because I really want to get our budget meeting schedule set. I'd like it to be on Tuesdays in between meetings because that makes it easier for me to tell people, no Tuesday nights.
Tuesday nights, yeah.
I can do everything except on Tuesday nights, so that, I think that worked for Deb last time. That's how the schedule was
I think that's
last
when we
year.
had it. We had the workshops in between.
We ended up
council
being
meetings.
using Tuesday.
No, we
nights.
started in July,
Mhm.
so we could start the second week of July.
Oh, yeah, so it begins again.
Well, let's see. Second week July is technically primary day, so that won't work. Actually, should we be, that's the second Tuesday of July,
Yes, the 14th is
That's the election.
which
yes,
is election day, which means actually
which is a little unusual, but that's where it is.
we can't meet them.
We could start doing workshops. If we break down our departments a little more, we could do workshops at the council meetings, like after the regular council meeting. Like there's departments like cemetery that doesn't require too much tinkering,
So
or
we could,
the library, or, you know, we could get some of those smaller departments that don't require as much hand-holding.
so maybe we
out
could
of
do
the
it
way
after the
early.
21st council meeting, start our first one with a smaller department like that.
The small ones work well. The library may be, I love the library, but it is a huge budget, and so
Right.
that may be some comments because we.
Yeah, but we could move that to a day that it's just workshop day.
Right, I think that some of these larger ones would have to be on workshop days, not the regular meetings.
I would prefer not to start with the 7th because I will not be here.
Yeah, I think that's gonna be too soon,
Yeah.
just in terms
But if
of.
we do the 21st after with a small, like cemetery.
We also have the second meeting regarding the town manager review to schedule, and I think we were looking at the end of July to do that.
We were looking at the end of July, but, let's see how things go. I have to finish, I've got every, every project going that it seems as though you, can have going. So I've thrown them all out there so that we can get things scheduled. So let's see what happens. I have a whole week of working with the auditors, because they'll be back. And then let's see if we can whiz it through, or if we're gonna be stuck in August, or we'll see.
Even if we waited and started in August, that still puts us 2 months ahead of where we usually start.
Or we could always try to aim for the 28th of July, which is the last Tuesday of July. It's not a town council meeting thing. Unless we wanted to do the 28th as our talking about the.
The comp plan item. Let's think about the scheduling, get input from Deborah, because she wanted to make sure that we didn't have items on the regular meeting. But then maybe, do we want to have one regular meeting during the summer and then put the workshops around it?
I like doing the workshops for the budget at the same meeting. I know it makes for a long day, but I feel like we have better participation
You
if we
do.
do it that way, because
That's
we're already
right.
here together and it's not requiring us to go out another time. I don't think that we had as good a participation as we could have at the budget workshops last
This
year
is
as far as
true,
the number of
yeah.
counselors attending when they were on different days. And I
Alright.
feel like not having them in attendance when we're doing the workshop part of it created problems later on because they didn't know about the discussions that were done in the workshop sessions, so.
So we've got the budget workshops, we've got the evaluation tool, and then we've got this comp plan thing. Or
What's
the
the comp
future,
plan?
the future goals, well, the comp plan that
The
Deborah wants to
comprehensive
go
plan that
over.
she wants us to do with.
Right, and then we've got the question of where do we wanna be in 10 years issue out there with the planning board.
Yeah.
Right.
Yeah.
Which
And we
is
had
part of the
planned-
comprehensive
We
plan.
thought we were gonna have some meetings with the planning board and come up with 3 topics, and we had a really great plan to kind of go through those things, and I don't know if I don't think the comp plan is something that we should do this year. You know, I think we
I
can
like the
start
idea
talking
of
about
starting
it.
with them talking about what our goals are for 10
Yes.
years, but I think 2021 is comp plan year.
Yeah, I
We're
think
too
so.
close.
If we start talking about what the items are now and taking a little bit at a time, I
Mhm.
don't think that any of us have the appetite to take on a major project on top of looking at what we might be doing for budgeting.
Plus, I think it gives us more time to solicit feedback from the community.
Yeah, and I think it's gonna be really
Instead of
important
rushing
to do
it
that.
through.
Well, the budget's gonna be interesting because of the revenue projections and all these unknowns, because we can't have any major increases and we don't know where the valuation's gonna fall. So right now, everything is totally iffy.
Mhm.
So it's gonna be hard to start now than usual. The assessing is, everything's running behind. The assessing did go on, during COVID-19 when we were out and.
You know, we started in July last year though, and we still didn't have enough time to finish
I
everything.
know.
Well, I feel like we can talk about our expenses. I mean, there's certain things that we know we're gonna have expenses when we look at the budgets in past years.
Things that we want to make sure we have, like a large screen for
You know,
meetings. I
that's-
mean,
you
I
know,
think
that
it's
would be-
practical to say,
It's very practical, but that needs to go under the additionals,
I agree.
you know.
But I think it's
rather than-
practical to say that we are looking at a time period where if we want to get people in, it has to happen through Zoom.
Oh, yes,
And,
definitely.
and that's just, I think going forward, how we're going to, the number of people that we had on talking about the pool and the theater funding and stuff like that, that meeting, the last one, was like, look at all the people, but they didn't have to come in.
Mhm.
And I think that's the future of our meetings.
Yeah, I think it is for a while. It works out good for these investment ones, and people don't have to travel 2 hours to get here and 2 hours
Right.
back for half an hour.
Well, and
That's a
if you
good
look
thing.
at people like, I mean, the number of people in this area that work at like Bath Ironworks,
Mhm.
they can't make it back in time for these meetings, but they might be able to turn it on. The cool thing about Zoom too is because they can connect through the phone, they can actually have it playing through their wireless Bluetooth in their car so they can still hear stuff.
Yep, this is true.
So I think it's the future, and it's something that we need to, as an additional,
Yeah.
add on as something that's going to be
Mhm.
real.
So what we do plan to do is, it works wonderfully upstairs. We're gonna get a new computer for down here to make it easier. And from looking at the different towns, the one that I like the best is South Berwick and their setup. They have the big screen, they set it so that the audience can look at it, they have the live stream, see it. You can see everybody on it, all their counselors were on there, and then the town manager was there in the building.
See, I think what would be really great about that too is, like, we had that planning board thing.
Mhm.
How much easier would it have been for them to have a screen like that to share
Mhm.
all of what they were trying to do, and then they could have tried to do it with a 6-foot thing, and they're like, they could have just zoomed in on the spot so that we could have seen it. I think it's something that just needs to
Mhm.
be part of our important discussions for additional items.
Mhm.
Those TVs are not expensive.
No, it's not.
They're very inexpensive to do something like that. We're not looking at buying a projector and a screen.
Mhm.
Looking at a TV on a TV stand that can go over there
Mhm.
and we can share to the population.
No, when I saw the South Berwick one, I thought this is absolutely perfect.
That's what we do at the University of Maine. All of our Zoom conferences are done on a big, huge TV screen so that everybody in the room can see what's going on, but it also allows us to see all of our people joining us.
Mhm. Yes, yes, it is good. Mhm. No, absolutely.
Yep.
We'll see if that's something that we can, I'm not sure how we would fit it in the budget, but, as in terms of now, but we do have an allocation for a new computer, and I think this one might be the one to do. Because otherwise I was taking my one from upstairs down here, and so we used the spare down here.
Mm.
And it just has its own little intricate issues, which is why it's different each time.
It doesn't know what it wants to do next.
It doesn't. Yeah. Well, very good. I didn't have anything else. The agenda will be interesting. There's a few grants and items on there too.
So are we going to plan to do at least another finance committee meeting?
Do you want to leave it open and we'll work out a schedule? I'll send out to you a schedule for budget sessions so you can look that over. And then we'll get Deborah's input. Anyone else? Everyone else?
Yeah, I'm going to be, like I said, traveling, so if we do any while I'm gone, I'll join via Zoom.
All right,
But-
so you mentioned the 7th you're going to be away. July.
Yeah, actually, let's see, our next town council meeting,
Would be July 7th, after the 16th.
yeah, so I'll be here for the 16th meeting,
Okay.
but then I am gone until the 13th of July. And I'll be back in time for primary day.
Yes, that will be interesting. The rules have changed on this. This will be quite interesting.
So we're gonna keep 2 meetings in July, 2 meetings in August this year.
I think we have to.
I think we're stuck with this
I think we
at
should.
this point,
I've
just
always thought we
because,
should.
just because we're, I like it when we have the one, it works out really good to get a lot of work done, and then you can do the budget sessions. But because
We missed
everything
so
got so
much.
backed up, even though we were working on it, you just couldn't get anything done no matter where you called or what you did,
Yeah,
except for stuff that you were doing internally. So everything is running behind.
no, I agree, I think we have to. Even though I'd love to see the one on the 7th go away because I won't be here, I think that it's important that we just have to do it.
Or you can zoom in, live stream.
Yeah, I'll zoom in on it.
Do we have any update about the paving RFP? The bids for that?
Okay, we accepted a
I'm
payment
sorry, not
bid.
paving, mowing.
Oh, yeah?
It was not submitted and they're out there mowing. So they're doing mowing everywhere
So there,
right now. So I don't.
Wait, they're mowing even though we didn't accept it?
The Public Works Department is mowing.
Oh, okay.
Oh, no, not the company.
I was
We could
gonna
never
say,
pay them.
wait a minute.
We could never pay them. No, Steve has been out there and he has Chris, from Water Sewer, they're out there mowing. So I said, we need another solution here.
Yeah, we need another solution because
They'll just mow
that
every
does not
day.
work. You know, we have
Yeah.
our foreman out
Yeah.
mowing grass,
Yeah.
and that's a job that he should not be doing.
Yeah, he's actually.
There's a lot of things that he needs to be
Grading.
doing, and mowing
Yes.
grass is not one of them.
Yes, we need to work on we need to get going on the roads there.
Yeah.
So that they can, get the culverts and the ditching in so that we can do the paving, because the company Chosen wants to pave now, and we said, oh, sorry, we're gonna have to wait a while here.
Well, we need to stop mowing and get that done.
Mhm.
As the fact that this hasn't been settled already is really upsetting.
Yes, I'm quite
I mean,
frustrated.
I just don't.
Look,
How
Really
do we
do.
not have somebody around here that, I mean, I know we've got goat farms in the area. Why don't we just call them up and say, hey, what will it cost to bring, this is what states are doing now, like out west. They're paying goat farmers, it's minimal, to bring their goats out, chomp on
You'd
the
be
area.
surprised how much work that would be for a goat farmer.
Would it really?
Yeah.
There's a lot, a couple of them.
Unless you have dogs that you can herd your goats with. or
Well, which is
something
what
like
they
that,
have in the
you to-
Midwest, so that's
Yes,
probably.
or it's such a wide open area that it doesn't matter. It's not, you know, at the water sewer plant in the middle of town.
So there's one item that they've absorbed into their schedule because it's small and it makes sense, so we got rid of one of them. But one of them, when we talked about it, you know, they don't need to do these every week.
No, I've been
No.
saying that forever. Don't mow it every week.
Especially where we haven't been getting any rain.
Can you just brush hog it 3 times a year? Once a month, go out and brush hog it. You know, because I don't know.
I think the exception is the FAA one, and that's because they have requirements.
airport.
Oh, yes.
Yeah, that's a totally different exceptional thing, but for the other areas, why are we?
Now, if we have, you said that there's some equipment at the airport for snow removal that they can only use at the airport.
Yes.
Can we buy a mower, like a mower with like wings on it, that we can like make 3 passes up and down both sides of the landing strip and just be done with it? You know what I mean? Like you can get gang mowers to go behind it, and it does like 4 times the width of the mowing area.
Well, yeah, because we have a machine down there, just.
All right, so you're saying outfit what we have to be able to take care of the grass.
Well, it's a tractor, right? With a bucket
Do
loader.
they
on
have
it?
a tractor down there?
They've got the loader.
Yeah. Well, you can. It's not a retrofitting thing. It's actually a tool you can put on those.
Right, it's like a 3-point hitch that you put on,
Yeah.
or I've actually seen, there was a guy, rather ingenious guy, he just took a bunch of small lawnmowers, mounted them on a bar,
Oh my goodness.
and had 5 lawnmowers behind, or 2 on either side of his regular lawnmower, because he did a big field.
Well, that
And
is
he
ingenious.
just literally dragged them behind him, and he did the swath with the lawnmower, and then he had 2 of these on either side, and you know, they're offset a little bit so you're not missing strips, but
That's fantastic.
Yeah.
I love that.
That's an interesting development.
But you can get a special attachment that would go on
Yes.
the back.
yeah,
And it would, even if we can't do 2 sides of it, if we could do 1 boom.
to have an extra, they do
Okay,
that on
well,
the
we can-
highways,
we
they have
can-
that on the highways, they have an extra boom on the side behind.
Okay.
Mhm.
Well, we can
Brush
definitely
hog there.
use our equipment down there if we did some sort of attachment at the airport, yes.
Yeah.
Okay.
And then that would save that.
Mhm.
It's so much faster.
Yeah, I gave them the 2 names of people
It's
to
faster
come.
just from the standpoint that the equipment is there at the airport and they're not hauling equipment
Right.
around,
Mhm.
you know, in the whole fire truck.
Okay, that's a good suggestion.
And it's already something that can only be used at the airport
Airport.
anyway.
Mhm.
So
Mhm.
why not utilize it during other times
Other
of the
times,
year?
other seasons.
Right.
In ways that no one ever thought of. All right, that's quite interesting. I'll check on that. Anything else?
I'm good.
All right, very good.
We can adjourn.
We are adjourning.
Excellent. And they gotta go get dinner.
I know, I came right from an appointment in Waterville to hear that's why I was a couple minutes late. And have not eaten yet. And I'm sitting here going, I hope nobody can hear my stomach rumbling.
No, I don't have that.
Well, I put Doug in charge of the spaghetti and I was like, I'll get Charlie for another night.
I'm surprised Jeremy hasn't been texting me.